Hi everybody. Welcome to my final episode for the home buying seminar video. Actually, I just did last Saturday. I just did a home buying seminar with my work. So have a pretty good turnout and have some information to provide it. So this helped me also to know what question other people may have, so I can provide to you in this episode. This episode probably will be much faster. We're going to talk about a couple of things here and there to end everything up. Hopefully in the future, I may update this due to each year thing could be a little bit different. And home buying process may be a little different with government support or county support. Again, please remember, I'm in Southern California. You should always check with your market, which that means your country, your city, your county, your bankers, your lenders for any additional advice, or your CPA and a lawyer for legal advice. Okay, because multiple states may have different rules. For example, New York does not does not do they don't do they have to have a lawyer involved. Okay, so each state could be different. And also I will check your lender to see if they cover every single area. So let's start the process. Now, today we're going to talk about pre-qualified versus pre-approval and all everything else. Okay, so in this episode, we're going to talk about pre-qualified and pre-approval. Why pre-qualified? Why pre-approval? Which one's better? And how long are they good for? Think about pre-qualified. Pre-qualified is pretty simple. It's like this. You walk into the bank or you go apply for a credit card. Normally you tell the bank how much you make, we run your credit, we give you a credit card, right? So pre-qualified normally means we don't need anything. We don't need you to prove your income or prove everything you say you have. For example, your down payment, all those things. We do not require it. Much faster process, okay, and easy to get. Now, pre-approval is totally different. Pre-approval now, in a way speaking, are required to have to have your tax return, to run your credit, to have everything prepared. Okay, so you need to show me your bank statement, your tax return, your most recent pay stub, all those things. Then we give up pre-approval. So which one's better? If you're really not prepared to buy, you just kind of searching, hopefully maybe get count eventually. If you feel like, oh, if I lucky, I'll go buy a house, and if not, doesn't matter. Pre-qual probably all right. But if you really are serious buyer, you want to get pre-approval. Your realtor well prefer you to have pre-approval because they know you can get that loan. You are about 80-90% guaranteed to have the loan amount for you. Another thing pre-approval do is give you the amount you are exactly qualified for. So let's say the bank qualify you for 800,000. So you can go to the buyer, say I have 20%, I want to buy $1 million home. I have my cash in my bank account for 200,000. Now I have 800,000 loan approval. I reapprove. All I need to do is make sure your house come up with the appraisal with that price, and then you accept my offer. So we've been here realtor now asking for pre-approval, or they call DU desktop on the right to make sure that person, the buyer, is actually able or capable to buy, rather pre-qualified. Because a lot of time happening in the past is that seller agent receive pre-qualified and accept the person's offer when come to the closing time. They no longer qualify the loan, and the person back out from the purchase. And because it's there's a contingency, sometimes most time your agent will put loan contingency. That means that if I'm not qualified for the loan, then I can cancel this deal without being penalized. So that's why a lot of seller or seller agent no longer want pre-qualify and they want pre-approval with DU desktop approval. DU desktop approval normally just computer generated approval. Normally same thing. They require to see everything to pre-approve it. Again, which one's better? Personally, I think pre-approval is the best. But if you're still in a 6-8 months time to buy, pre-qual may be good. But if you're serious buyer, you really want to buy, you want to make sure you get that house, I would go with pre-approval. And they are good for 90 days. Because normally past 90 days, the bank want to run your credit report again to make sure everything's still the same credit score and nothing changed. So that's pre-qualify and then pre-approval. Now, the other thing you might hear is rematch. Sometimes you go to one lender and other lender want to win the deal from you and they want to rematch. So you can go to different lender to shop around, and some of them you say, hey, this offer me better rate, and some bank will offer rematch program to rematch it to give you the same interest rate or the same offer to have you stay with them to do the loan. Okay. You need to get a realtor. Make sure you get a realtor who help you to find a house. You find a good one that's really you like and you can trust, and they can do everything for you. Make sure you understand and fighting for you to get that home for you. Escrow for California, we have escrow, and that's the third party basically holds all the out your money there in the middle while everything try to go through. Your down payment, everything is held by them. Okay. Title insurance company, they guarantee the title of the house is good. So that's what need to understand. Contingency normally is if your real estate agent work for you together with the contingency and the contingency removal. Those things, because I used to have a real estate license, but not anymore. But it's best to work with realtor to really understand those things. So you need to trust your loan officer. You need to really work with your loan officer. There's nothing I can say more about this. Okay. Insurance, earthquake insurance, flood insurance. You definitely need insurance, or sometimes HOA covers it. You still could need to require to buy insurance. You have to have a hazard insurance. That's no way out. Earthquake insurance is optional. Personally, we in California, I can't suggest it, but it's not necessary. Flood insurance. Again, we in California, but in some area, California or in that area is high, it's much easier to be flood, and then the loan, the bank, the lenders could require to have flood insurance. So those things will be checked. Lastly, I want to talk about do and don't do. Okay. So don't do anything going to affect your credit inside the 6 months of you want to purchase the home. Okay. Getting a credit card, buy a car, they all going to drop your credit score sometimes close to 40 points. Closing a credit card, yes, you will drop your point as well. Everything will take 6 months for you to rebuild. Okay. Don't do if you in the process of in the escrow and you apply the home loan and they run your credit, they give you approval. A lot of people do is they went out there go get a credit card, or they went out there go buy a car before the loan is closed. That's big major problem. That could cost you lose your home or the house you want to buy, or change your rate, or worst thing I heard people, well, not I heard, I talked to people before, they try to refinance or buy a homes because they want to buy a car. Their DTI, remember, debt to income ratio, is no longer in line, so the bank will no longer offer them the loan. Bank will run your credit right at the funding day. That means the day they're going to send the money to escrow, they're going to run your credit one more time. So they will run your credit again. So if you want to get a car, you want to buy a car for somebody, for your wife, birthday, whatever, house is big, home is big. Get the home down before you go apply for all those things. Okay. Next thing, don't do prove money you cannot prove where it's come from, or cannot be used as your down payment, or cannot prove the source into your down payment account or the account you're going to send it to the bank. Okay. When you do that, what happens is you will cause bank to review everything, and sometimes they will not approve the loan, or they may say, okay, your down payment we need to trace more, or have other reason. There's a lot of things. Plus, you're gonna bring yourself a lot of headache. My sister, when she refinanced her home, she deposited $40 check from one of those you buy something refund check, and the bank asked for it. Couple $100,000 deal, but they're asking for a simple $40 deposit. Okay, so best thing, just if you cannot prove where the money source, then don't pull it. Money under the pillow, under the mattress, you cannot prove it, don't pull it in. Okay. So what's the best practice? Talking to your loan officer all the time. Okay, working with your loan officer all the time. Even when you want to wire the money to your escrow account. Okay, don't do this. Sometimes I have people show the account where they have their down payment, but they wire the money from another account they never told their loan officer about. That going to create problems. Okay, sometimes it can be fixed, but it create a lot of problem. Sometimes cannot be fixed. Okay, working with your CPA to understand, how much income you make and how much you qualify. If you're self-employed, you may want to talk to your CPA or legal advisor to make sure you don't write off too much stuff. Okay. Document source of fund, especially in cash. Make sure you have a documentation. Monitor your credit. Okay. If you want to know how you should put in your house into the title, or put the how your title should look like, you always can talk to your agent, or you can talk to legal advisor. Okay. Thank you so much, and thank you for listening on my home buying seminar episode, especially this. I know it's my first time doing this. I may not do a great job, but hopefully I will improve, and and I probably update it in the future. And so next episode, next week, I'll probably do something fun, talking about a bit banking. So if you have family member ever want to become banker, or know how banking life is like, or what banking career is, I'm going to talk about those things. Thank you for listen to me, and hey, you the banker, it's me. Thank you. Please share and like.